We believe that cryptocurrency is the future of money. Bitcoin is not perfect as money, but it is very good at money and surprisingly good at money, and is better than probably anyone expected. But we believe it can be improved upon, and so I'll be talking about how TEXITcoin will do that. My name is Jason Hommel. My blog is revealingfraud.com, so if you want to follow me, you can go to my website, revealingfraud.com, pull it up on your phone, and if you do, it should look a little bit something like this on the left. That's my website, Revealing Fraud, sponsored by TEXITcoin. So I'm a blogger, I'm a thinker, I'm an influencer, I'm a writer, but I can't really write first until you think. So for me, writing is not difficult. It's the thinking that's the hard part. And then once you've got your thoughts down, boom, then the writing comes. So I never have difficulty writing. I don't write unless I have something really important to say. So my articles are very punchy, and I've had some enormous influence. So I call myself an influencer. They call, that's kind of a bad word. They use that for other people in other industries. I'm not a registered financial advisor, not a stockbroker. Past performance, no guarantee of future success. I did teach Bible prophecy though, and Jesus does say, "You shall know them by their fruits." So in that sense, a person's past performance is an indication of their future success, interestingly enough. This is to remind me that I should talk a little bit about myself. I don't like doing that generally speaking, but I do a little bit of a bio. It goes on for 2 pages. We'll skip that. Maybe, let's say, I'll summarize a couple of things. I did influence Ron Paul to run for president. I saw him at a libertarian convention one time, and I asked him, how have you used libertarian ideas about free markets, which supposedly should make us all richer and wealthier? How have you used those ideas to make yourself wealthy? And he said, actually, I gave up a lucrative practice delivering babies to go into politics, and I actually took a pay cut specifically to promote the ideas of liberty. And I knew I had it. So after his talk, I then went and spoke to him and said, well, when are you going to run for president? He said, well, I don't think I really can because libertarians, we only ever get 1% of the vote. And I said, you just said from the stage that you ran and got into politics because you wanted to spread the ideas of liberty. If you run for president, you will do that, and you, in essence, can't lose. Even if you lose, don't win the presidency, it doesn't matter. You'll get the ideas of liberty on the national stage. So I thought about it. I don't know. How do I get the money? He said, well, silver and gold markets have been going up, and you're our guy. You're the guy who promoted silver and gold coin. There's, of course, a ton of money is going to flood into you if you try to campaign for president. So we did. So I influenced Ron Paul for president and influenced politics quite a bit by asking just a couple of good questions at the right time. So that's an example of how I influence things. There's also a guy named Jack Van Impe. He had a Bible prophecy TV show. I made a silver coin that convinced him to change his whole worldview on Bible prophecy because he viewed the European Union as the beast of Revelation 17:18, and I convinced him that that beast was not the European Union, but rather a world conglomeration of world governments. And I convinced him that simply by making a coin that fell into his hands. I made about 50,000 of those coins. And that, again, is another small example of how the truth, when spoken right, can really have a massively powerful effect. I also had a powerful effect one time on JP Morgan, who said that they were not manipulating the silver market because they were only hedging client long positions, which is the same thing as admitting they were manipulating the silver market. So that was pretty easy. So I'm a leading expert on a couple things not taught in the university. So I'm an expert on Bible prophecy, monetary properties of silver and gold, monetary properties of Bitcoin, monetary theory, especially as it relates to Bible prophecy, and again, how gold and Bitcoin compare and contrast, which is today's presentation. I'm also an expert on how copper and iodine are great for nutrition and health. I'm also an expert on alpine ski racing, but we won't talk about those things. I like gold, Bitcoin, silver cash, and TEXITcoin. They're each and all very useful. So, my presentation, I wrote an article, 24 ways that Bitcoin is superior to gold. That article itself is superior because all other articles I've ever read on that subject only list 10 or fewer properties that Bitcoin is superior to gold. So my list is 2.4 times bigger, so you are in the room of a world expert that you can measure how I am a world expert, because my list is longer. Okay, People tell me they don't understand everything, and if you don't understand everything, that's okay, that's common. People tell me that these are abstract concepts that I'm dealing with. They're also new, which makes it doubly extra hard. Even myself, I am still learning. It was just a couple months ago, my list of ways Bitcoin is superior to gold was first only 7, then was 10, then was 13, then was 14, and then it gets bigger and bigger. So I'm still learning, I'm still growing my list. So I like to reason by analogy. I am not an electrician, but I can turn on the lights. I can't make a cell phone, but I can call people. I am not a plumber, but I can use a toilet. Yes, so you too can learn Bitcoin. Because these topics are often difficult and I have to go over them relatively fast, I say these are topics to study later, so go to revealingfraud.com, bookmark the page, bookmark my essay, we'll get through it. Typical Bitcoin commentary analysis drives me nuts because I think people don't know what they're talking about. That's part of my problem, I guess. I see other people making a lot of guesswork, doing a lot of wrong guesses. They don't understand or even know or even mention the fundamentals. Most of what I read out there is chart reading. There are also many false accusations against Bitcoin, which is interesting. That creates confusion. You have to wonder if they're creating confusion on purpose. So if you're confused, it's not because you're confused, it's because they're trying to confuse you. So that's an important point. Most people and I read people in question mark because who knows if they're bots or they're paid shills, you don't know. Most people who come up with bearish opinions on Bitcoin never mention the word inflation, which is weird. Therefore, I consider it to be disinformation, misinformation, propaganda, or a campaign, because I really just can't believe people are that dumb. Bitcoin is designed as an inflation hedge, it's going up. You know, you can either be in money that's going down, or you can be in money that's going up. Bitcoin is the money that's going up. Often people do mention who is buying or who is selling. They don't ever really get into the biggest issue of why. The issue of why is driven by fundamentals. Everything else is noise, in my opinion, and we are covering the fundamentals of why people are buying Bitcoin, at least in my opinion. And I deal with facts, verifiable facts. So that's the fundamentals. What is Bitcoin? What is it? This is not a Bitcoin. This is an image of a Bitcoin iconic design designed by Bobby Gray, who's the founder of TEXITcoin, which is the image of a physical object. But Bitcoins are not physical, they're digital. A Bitcoin is a digital reward for solving a math problem known as the hash or block, or known as the hash of block of trading data. Whichever computer hashes the block first, they get the block reward, or some Bitcoins as the reward. The rewards can also consist of a little bit of the transaction fees. Bitcoins were designed to have monetary properties. These properties are so numerous and so superior that some say Bitcoin is the ultimate money, or the best form of money that exists. And the reason why they say that is because of the information I'll be going over next. Again, what is Bitcoin? Bitcoin is the result of a free open source computer program that anybody can run. Bitcoin is not a company. You cannot sue Bitcoin. You cannot hack or attack Bitcoin. Many hackers have tried. They've all failed. Bitcoin is not a stock. Bitcoin is like a commodity that was made as a legal argument. Bitcoin is backed up, tracked, and given value by an ongoing open ledger or blockchain that exists on millions of computers running the Bitcoin program to earn Bitcoin rewards in over 100 countries around the world simultaneously. In earning Bitcoin, they establish a right and confirm the blockchain and rise the value of Bitcoin. I hope that explains that a little bit. This is an interesting chart. This is proof that I had nothing to do with the development of Bitcoin. There are all these historical, I can't even read this on the computer. Cryptography, links, timestamping, public keys as identities going back from 1975, all the technological progress that needed to have been created before Bitcoin could have been created. And the last thing on there is the Lehman Brothers bankruptcy in 2008, which I will touch on in a minute. All right, again, my name is Jason Hommel. I wrote a Silver Stock Report newsletter. And we had a discussion forum. I had about 1,000 people who joined my discussion forum, and people were talking. In our discussion forum, there was a desire to create an uncensorable peer-to-peer discussion forum because people were scared of internet censorship and censorship on Facebook. In order to create a peer-to-peer discussion forum, it would have to be hosted on multiple computers, and there has to be a way to pay people for hosting, but most computer programmers don't consider economics when they write their programs. They don't consider the economic costs of the hard drive space. They don't consider the economic costs of connecting to the internet. They don't consider the economic costs of, gosh, there's 3 big things. Or the compute power. All of those are costs that aren't really factored into when they write a computer program. In order to create a true peer-to-peer network, you have to have a way to pay people for their compute power, their storage power, and their bandwidth for hosting the network on their computers, so therefore you need a form of electronic money. That would be the precursor to creating an uncensorable internet, which is really what the internet was designed for in the first place, was something that could be a communications network that wouldn't come down in case of war. But to create a network where we can actually talk in an uncensored way requires a little bit of extra. We're not there yet, but I believe it's coming. So first we need a form of electronic money. So in my discussion forum, there was a guy who said he thinks he could do it, but he wanted to make sure that his electronic money had all of the essential properties of money, so they asked me to write up the properties of money, and so I did, and I wrote an essay on June 5th, 2008, the 4 fundamentals of the silver price, and I'm going to go over that essay next. By July, eGold was shut down, and they pled guilty to federal criminal charges. It probably was ongoing for about a year before they finally pled guilty. In September of 2008, Lehman Brothers filed for Chapter 11 bankruptcy, the largest bankruptcy filing in U.S. history, with $600 billion in assets, $613 billion in debt. They were likely a silver short. It was the rumor at the time. I was one of the large promoters of silver at the time, as evidenced by the fact that in the United States, even though while we weren't buying a whole lot of silver or gold, 50% of investment demand was going into silver, 50% going into gold. And worldwide, the gold market is about 500 times bigger than the silver market. So for the United States, to be putting half and half into silver and gold is very interesting. And I was the largest silver promoter in the United States at the time. Silver was trading a high at around $20 per ounce. And in about 2 weeks after the Lehman Brothers bankruptcy, hit a low of $8.79 per ounce. By 2009, the BIZ, the Bank of International Settlements, disclosed that there was $200 billion worth of paper silver sold over 20 years worth of mine supply during the time period when silver prices crashed. So in other words, they flooded the market with paper silver derivatives. By October, the Bitcoin white paper, the original thesis paper written under the pseudonym Satoshi Nakamoto, was written. And my contribution may have been to help him dot the I's and cross the T's to make sure that his electronic money had the properties of money. So I know a little bit of something about the subject. I'm not saying it had anything to do with the development of Bitcoin. They maybe just checked with me first to make sure that it was decent, and maybe it came out of my discussion forum, but I have no idea who created it. He kept himself anonymous. I told him he had to keep himself anonymous. He said, well, why don't you buy in? And I said, you're going to build something that the government's going to attack, I'm going to be part of it. So I turned down the opportunity to invest in Bitcoin in the very beginning. There's no bigger Bitcoin loser than me, but at the same time, I was also responsible for making sure that they had a good understanding of the fundamentals. So I wrote up the 4 fundamentals of the silver price, which had to do with supply and demand of dollars, the nature of silver, and supply and demand of silver. So in this paper, I talked about the nature of money itself. It had to be medium of exchange, unit of account, store value. I know you can't read that there, so I made it bigger, and I put it in the next 4 slides. This is all from my 2008 paper, which was called The Essential Nature, Supply and Demand of Both Silver and Dollars in 2008. May have helped Bitcoin be developed correctly, but also Bobby Gray says the same exact essay inspired him to write and develop TEXITcoin, to have the properties of money. So that's very interesting. He almost kind of reminded me that I may have had something to do with Bitcoin's development in the early days. So, to function as money, this is from 2008. A monetary item should possess a number of features to be a medium of exchange. It should have liquidity, be easily tradable with a low spread between the prices to buy and sell, in other words, a low transaction cost. That is the number 1 fundamental feature of TEXITcoin, by the way. It should be easily transportable. Precious metals have a high value to weight ratio. This is why oil, coal, and water are not suitable as money, even though they are valuable. You can't carry with them around to buy groceries, so they're just too heavy. And what are you going to do with oil? If it's $100 a barrel, we do $10,000. If you bought 100 barrels of oil, what would you do? Store them on your front lawn? It's not suitable for money. It just doesn't work. It's way too heavy, way too bulky. Money should be durable. Gold and silver coins are often mixed with 10% copper to improve durability. Coins are made with ridges around the rim to prevent coin shaving or debasement. To be a unit of account, it should be divisible into small units without destroying its value. Precious metals can be coined from bars, melted down into bars again, with a low percentage cost. This is why leather and live animals are not suitable as money, because they're not easily divisible, and once you cut leather apart, you cannot rejoin it back together. Bank pellets have been used as money, time and place, but they're not ideal money. Money should be fungible, that is, one unit or piece must be equivalent to another, which is why diamonds, works of art, or real estate are not suitable as money. Not to say that they're not valuable, they just don't work as money. Money needs to be a specific weight or measure or size to be verified and accountable. You must be able to weigh, measure, and count your unit of account. To be a stored value, to be long-lasting, durable, must not be perishable or subject to decay. This is why food items, expensive spices, or even fine silks or oriental rugs are generally not suitable as money. The form of food that has the longest shelf life is actually unground kernels of wheat. They will last 20 years. Maybe canned goods. Some of the objectors put wheat in cans, but money also should have a stable value. It should be difficult to counterfeit. Genuine must be easily recognizable. Easy to recognize part, that's why platinum and palladium are not good as money, because they're so seldomly used. Who's never really seen them? It gets a lot harder to verify that they're real. Would you even know how to distinguish between platinum and palladium? Most people have never even held a gold coin in their lives. So platinum and palladium, even though they're valuable, also don't work as money and have never been used as money. To be anonymous, money should not be subject to government tracking. It should be usable for purchases in a black market. It should not require equipment, tools, or electricity to use. Why did I stick that in there? Because I knew they were asking, the Bitcoin people were asking me to write this, and I was a no Bitcoiner. I did not like the whole concept of electronic money, because why? I was a silver bug. So this is my bias seeping into the article. But me now, I can go back and look at that and go, yeah, but gold mining requires energy. Mic drop moment. Gold mining requires energy. Gold required energy to get out of the earth. And, very often some of the best counterfeit gold detectors are these X-ray F fluorescent guns, which they require electricity to use. They're a tool. It should not require a marker image to be valuable, but rather be a just weight and measure. That's also my goals for bias. I concluded with, if you want to make money, you should try to acquire things that have above characteristics. That is my unknowing endorsement of Bitcoin. Bitcoin has those characteristics, and better than gold does. All right, so from 2008 until 2024, I was one of those never crypto guys. I had my pro-silver bias, so I missed out on Bitcoin, even though I was there trying to give advice. Knowledge means nothing without wisdom or the right application of the knowledge. The fastest way to be right is to admit when you were wrong. That's a very long time period when I was wrong, from 2008 to 2024. I was wrong about Bitcoin. That's the best part of the presentation, when somebody can say why they're wrong. How often do people say that? I was wrong! It's on the next slide, too. No electric gold mining requires energy, too. Whoa, was I wrong? I just went over that slide. I was wrong. I was wrong! I thought Bitcoin had to be better than silver. I was wrong on that point in 2 ways. 2 ways, really? First, it only has to be better than other bad paper money. It is inflating and easier to access, providing an alternative. If Bitcoin is a money that's better than the Chinese yuan that's losing value, or any other currency that's losing value in the world, then Bitcoin has a use and it has a value, especially if it's easier to acquire than silver and gold. And second, Bitcoin actually is better than precious metals when it comes to having superior monetary properties, so boy was I doubly wrong. So that's the main part of this presentation, which we'll get to in a few minutes. Next, I thought there was no true scarcity of Bitcoin. I was wrong in 2 ways. First, I thought that since it was digital, that anyone could just make a new and better Bitcoin, but many have tried, and all have failed so far after 16, 17 years now. Second, alternative currencies do not take anything away from the dollar. Consider the Mexican peso. Often, they prefer to hold US dollars instead. So the existence of other currencies creates more demand for dollars because it's not as bad. Similarly, other scam cryptos often create more demand for Bitcoin. How does that work? Well, if a scammer is going to scam people with a rug pull and a fake crypto that's bad, where is he going to put his profits? He can't hold his profits in the yucky crypto he just dumped on everybody else. So he's going to take his cash and he's going to hold either something like silver, gold, cash, or maybe Bitcoin. Probably Bitcoin because he understands Bitcoin enough to make a copycat scam token. So In my opinion, most cryptos are indeed scam tokens. 95% of them are layer 2s right in the back of the networks. Fools their money are supermarket. Okay, so 50% of layer 1 cryptos have no true scarcity like Bitcoin does. XRP, they can make as much of it as they want. Same with USDT and USDC, but that's a function of them being stable tokens. To be a stable token, if more dollars go into their system, they have to issue more tokens one for one. So that prevents the price going up, and they do that automatically. So that's a feature of USDT and USDC, them being stable tokens, but there's also no upside value. They're going to go down just as fast as the dollar goes down. Doge also is another token that has unlimited issuance. Why would anybody buy XRP in Doge? It would be on me. But there are people out there who, surprisingly enough, don't study the properties of money. How sad for them. All right, so I am a world leader in the subject of Bitcoin's monetary properties. How can I say that? Because all other lists on Bitcoin being superior to gold contain no more than 10. My list is 24. That's 2.4 times bigger than all the others. Now, there may be someone somewhere with a bigger list, but I can find them that may exist. They're not in the public. For example, the programmer Bitcoin made no more. He created these properties within the program, but he had an advantage. He sought out a monetary expert, Jason Hommel, of 2008, further establishing my credentials. You're supposed to say something positive about yourself as a speaker, right? Okay. So the effects of monetary properties are synergistic. They're like network effects, and we need to use sound judgment. Aristotle, he said that money must be durable, divisible, and portable. And I and many others, we claim that money is, or used as, a medium of exchange to store value and keep it account. So here's the meat and potatoes of the essay. I've shortened it. If you want to read the full essay, it's available online from dealingfraud.com. Bitcoin's property is superior to gold. Bitcoin is impossible to counterfeit. I was actually a gold dealer, and I was put out of business by a counterfeiter. I never bought his counterfeit stuff. But he began selling counterfeit gold bars in my hometown, and all my business flow went to him. He was selling copper gold bars that were gold-plated, manufactured in China, made to look like they were Perth Mint gold bars, and he was selling about 2% over spot, and all my business flow went to him. I didn't even buy or even see any of the counterfeits, but with no business flow, it's time to just go out of business. I didn't really realize how I could compete at 2% because I was buying the real gold bars at 1% over spot from the refinery. So how can you sell them at 2%? You just can't. I was living on a 3% spread, but then when there's no business, I was out of business. So counterfeiting happens in the gold market, and it even put me out of business. Bitcoin has never been counterfeited. Bitcoin has a fixed supply, there's no inflation, but there's gold mining every year, adding about 1.5% to the gold supply every year, whereas Bitcoin has a fixed supply of 21 million coins, thereabouts, something like that, and then there will never, ever be any more. It is decentralized, it can't be censored. Bitcoin is lighter than gold. It is less risky to transport than gold. It is cheaper to transport. It is faster to transport, which is all very interesting because very often there's a trade-off. If you have less risky, maybe it's more expensive because you're paying for more for insurance, but it's better in all the ways. It's cheaper to store. You don't have to pay for vaulting with Bitcoin. It's easy to verify the authenticity of Bitcoin. There's a higher liquidity in terms of being traded 24 hours a day, 7 days a week. There's global accessibility to purchase Bitcoin. Anybody with a cell phone can purchase Bitcoin. They don't have to go through physical gold dealers. Gold dealers don't even exist in many parts of the world. I don't think there's hardly any silver trading in all of Africa because there's no silver mining in all of Africa. So there's no silver trading going on in all of Africa. There's no history of using silver coins in all of Africa. And maybe that's why it's economically underdeveloped as well. You know, silver is needed for trade, at least historically. So if they never went through that period, how would they ever get going? Bitcoin is more easily divisible. It's more easier to recombine. Some of these features and benefits of Bitcoin also apply to our electronic paper money. Paper money, of course, fails due to the inflation problem, which references back to point number 2, the fixed supply of no inflation of Bitcoin. So again, you see how these properties are synergistic. You can have a lot of these properties, but if there's tons of inflation that create a lot of paper money, then paper money is no good. Even though paper money is still better than gold in some ways, it should be better than gold in all ways. But of course, paper money is not what Bitcoin is. And we continue. There's another 10 properties. Bitcoin is more fungible, meaning that the units are more similar. It means it's easier to use Bitcoin as a unit of account than it would be for gold. because I bought some gold for my buddy here, Greg, who's with me here today. He had some gold coin, it was old US gold, it was not exactly 1 ounce. He had some gold that was crude grams, some that was gold eagle, and some that was gold bars. It was a mix, not entirely fungible because they're all a little bit different. And then if you go into, let's say, gold maples, which are 99.9 fine, great, but they're also easily scratched. And as soon as you scratch a gold maple, it's worth $50 less. So with all of those individual differences, it makes gold coins less fungible and less ideally fungible than Bitcoin by way of comparison. Bitcoin is resilient to supply chain disruptions. There's not going to be a gold mine or something that's going to go offline or come online. There are no import or export restrictions. The blockchain exists everywhere in 100 nations on computers, which is another point, not a typo. There's a transparent public ledger for Bitcoin and blockchains everywhere in 100 nations on computers, or 100 or more nations. Even though the trades for Bitcoin are transparent on a public ledger, there is also potential for enhanced privacy, and there are online tools for that. Bitcoin is harder to steal. Bitcoin is programmable for smart contracts. It's very difficult to have an automatic gold payment to anybody in the world. That doesn't really exist. There's a growing and increasing acceptance for Bitcoin in the world, but in contrast, gold and silver seem to be, as Bobby Gray likes to say, call them the horse and buggy money. Gold and silver are used in times past, but there's not a growing acceptance, at least not right now. There's no value-added tax. There's a value-added tax on silver in Europe and gold in India. Bitcoin eliminates many middlemen in the gold and silver markets. In the gold and silver markets, there's people who run the mints, who run the refines, who run the mines, there are the traders, the brokers. Often, if you try to buy silver from a silver dealer, they will then go into the dealer network and purchase your silver from other dealers. But what happens if many people try to buy from many dealers at once? The market seizes up. So that's not good. Finally, Bitcoin has a higher, faster recent growth rate in terms of its value. The phrase I like best to describe that is the money go up technology. It sounds like an Asian terminology, but yeah, Asians love their crypto. Bitcoin has been going up, therefore, an average of 154% per year over the last 16 years, whereas gold has averaged about 10%. So that's the end of that. The article goes into each one of those in more detail, and what's funny and great about AI is you can punch my article, copy and paste it over to an AI like Grok and ask him to elaborate on each point, and they will. It's amazing. Peter Schiff is one of the most notorious anti-Bitcoin analysts, which is weird because he doesn't really present any analysis. He says things like, there's no intrinsic value. Well, is the value of gold inside the object of gold? No, you can't cut apart a piece of gold until you can find some value in there somewhere. The value in gold lies within its inherent properties, and as those properties are recognized by other people, it has value. The value is set by the marketplace. So there's no, the intrinsic value argument is just all wrong. The value is set by the market. That's not analysis, it's an opinion and admission. For example, he doesn't sell or have any worthless Bitcoin. If he's calling Bitcoin worthless, A, that's his opinion. He doesn't actually have quote-unquote worthless Bitcoin that he could sell to me. Well, if he values his Bitcoin as zero, why won't he sell me his zero value Bitcoin for $300? I will buy all the Bitcoin I can from him at $300 each. But he doesn't have any to sell, so his opinion is fraudulent by nature. The value is the value. He doesn't sell anything below market price. Not only does he not sell any Bitcoin below market price, nobody else does either. So all those values of people saying that Bitcoin is worth zero, that's an opinion that's worth zero. The other thing he says when cornered, let's say on the current value, he'll say, well, the value in the future of Bitcoin will go to zero. That also is not analysis. That's a prophecy. It's not analysis. It's unfalsifiable kind of a statement. It's kind of rather the conclusion you would draw from an analysis, but you can't dress up your conclusion as an analysis. So I like to refute arguments, but at the nature, when he says Bitcoin is going to be valued nothing in the future, that's not an argument to be refuted. It's just an opinion or conclusion. So since it's not an argument, we just move on. Another one of his arguments, the third major argument he makes, is that regulation possibly will wreck Bitcoin, but Bitcoin was designed specifically to resist regulation or attacks by government or any other entity, and so far it has been a tremendous success at that.
51 nations, according to Grok, have tried and failed to regulate Bitcoin, but the United States did regulate gold from 1933 to 1974, so his argument that Bitcoin will be regulated out of existence actually applies once again more to gold than it does to Bitcoin. So once again, Bitcoin wins. And then we also have institutional adoption now, which means that the regulation will wreck Bitcoin. That argument died at least a year ago. This is Bobby Gray. This is me. This is a day after him inviting me to take a look at his TEXITcoin to see if it had any elements of fraud that he could fix while it was still a young project. I think that was his way to trick me into examining it because he knew that if I did, I would love it. And I did. I loved it. When my wife first heard about it, she said, "Ooh, a Texas project? Ooh, crypto? Something I can trade and learn about trading? Excellent. I want to buy like $1,000." And I said, "Yeah, we can afford to lose $1,000, no problem." But after I heard Bobby Gray's plans for his baby crypto project, I said, "Baby, we have to go all in. We have to put like $9,000 into it." And it's been the best decision ever. So Bobby's plans, the two things that convinced me the most was he wanted to limit investment to no more than $9,000 because he wanted to have a greater network effect with a greater number of people. And I instantly realized that was absolutely brilliant and doing everything wrong compared to the gold market that I was familiar with. All these companies want to raise as much money as possible. They want to raise the money from accredited investors. So they say the limit of the low end you can invest is $50,000, $100,000, $250,000. And he was having the investment at $9,000 and nothing bigger because he wants the greater number of participants. And I realized instantly that if wealthy people wanted to get a hold of TEXITcoin, if they're limited to the mining side, then they have to buy the coin and label the market, which would lift all boats. So I was like, I'm all in. This is going to be great. The second thing that he talked about was, he said, we are going to issue layer 2 tokens on the back of our network to be used as stable tokens, not to trade cryptocurrency like they're used today in the crypto markets. That's the only place where stable tokens are used. But we will teach people to use our crypto as stable tokens for like fair town tokens or fair tokens. We won't need anybody's permission. We just need the merchants on board, and merchants will come on board because the fees will be so low. So I knew instantly that he had a track record for getting silver to be used as money through the American Open Currency Standard, and I realized instantly this is going to be a wild success. We're not quite there yet to issuing the stable 2 tokens, so it's still early in the project, but I have faith that Bobby Gray is going to take this project very far. We consider TEXITcoin, we call it a Bitcoin redo. We're doing it over. We're starting over from the beginning, from the ground up, for great investment returns. Litecoin is a clone of Bitcoin, and just like that, TEXITcoin is a clone of Litecoin. It's a proof of work coin. We're basically creating our own blockchain from scratch called the TEXITcoin blockchain. So it's a brand new, we've been around for 2 years. Designed specifically, as I mentioned earlier, for low transaction fees, which leads to a better monetary property than even Bitcoin has. Let me pause here and explain. Bitcoin right now costs between $2 to $5 to get on the block. Because that's so expensive, nobody will ever use Bitcoin to buy a cup of coffee. Whereas ours is designed to be used as money. And if not the underlying TEXITcoin to be used as money, a stable token, a stable layer 2 currency token can be used as money with a low enough transaction fees. And the way we'll get our transaction fees low is we're going to limit the mine size. See, in the crypto market, everyone always thinks bigger is better, but you don't always have to go bigger to secure the blockchain. You can create security another way. For example, PayPal and the way the banks secure networks, you can actually secure a network far better than the way they've done it with a much smaller network. Designed for faster trading also, the Bitcoin makes a block every 10 minutes, TEXITcoin makes a block every 3 minutes. Faster trading is another better monetary property, and if you set it up to the merchant so that it says, instead of saying pending, it says, pending with a good, if the wallet that's sending the amount has a bigger amount than the amount that's being sent, then it's 99.999% sure that it's going to get there, even though ideally things should be confirmed on the blockchain by about 4 times to make sure that nobody else can create a blockchain to undo the transaction. That's kind of how it works, but there's a way to make it so that it's fast and reliable for the networks, and we're working on that. TEXITcoin is also designed for peer-to-peer payments. What that means is from person to person to function as money without the need for a crypto exchange. As it is right now, most people have to first, you have to log into your Coinbase account, then you can take your crypto, and then you sell it to Coinbase, and then you get your cash, and then you take your cash, and you get your your cash crypto, then you get the cash, send it over to your bank, and then you've got your money, and then you trade your money back to person with TEXITcoin. Instead, I have the TEXITcoin app on my wallet, and I can send TEXITcoin directly to my wife, and it gets recorded to the blockchain, and no exchanges were used in that process at all. And the fee is automatically taken out of it. It's absolutely brilliant and genius. It allows for a person-to-person or a person-to-merchant trade. We don't have to go sign up for an exchange to use it as money. That's exactly what money means. And TEXITcoin was built to have that. Where we're going next, 25. We're designed to help layer 2 stable dollar-backed crypto for person-to-person payments without worrying about wild price swings or the underlying layer 1 volatile crypto price. A lot of people don't like volatility. They're not interested in protecting from inflation. They just want something that functions as money, but they want it to be electronic on their phone. They want it to be easy. So TEXITcoin will create layer 2s that are easy. TEXITcoin is one of the very few cryptos that will have an ad budget. It's designed to have an ad budget. Unlike Bitcoin, there's nobody ever who ran Bitcoin. Bitcoin is simply an open source computer program. There was no money that went into any Bitcoin program or centralized authority, whereas TEXITcoin is run by Bobby Gray, who is coordinating the mining, and he's got money for an ad budget, which provides for people like me to come to shows like this, which is awesome. The ad budget also allows there to be an affiliate program, so that if you decide to get into TEXITcoin, you can share it with your family and friends and earn commissions through the MLM. And in fact, it's about 40 to 50% of the money that comes in to buy the mining gets paid out in commissions to people who share it, which is great because that creates a network effect of more people. In fact, since we got in a year ago, there were 400 people. It took 8 months to get up to 400 people mining TEXITcoin, and in the last year, we've grown to 54,000 people now mining TEXITcoin. That's the power of MLM. When MLM is done right, when we've not going to bankrupt the company, it's done great. And he's got actually 2 limits to prevent his MLM program from being a Ponzi or pyramid that bankrupts the company. The first is, for each little payout spot on the tree, it pays out more than $3,000 a week. That's the first limit. The second limit is that nobody takes out from the MLM program more than they brought into the company. So that way, points kind of get capped one way and then they get capped another way. So that prevents the MLM portion from bankrupting the company, which makes it safe. In fact, the US government regulations, according to Brock, they say if an MLM is paying out more than 70% of the money coming in, that's a danger zone and a scam zone. So we are in the healthy zone of keeping it at 40 to 50%. TEXITcoin is designed to be mined in Texas only, which is the cheapest electrical source in the United States, cheap electric, and also limited mine size and low fees. There's several ways to describe the mine size. 100 million mega hash in terms of hash power is one way. He'll spend about, say, 60, 70 million on computers to fund the array. It will be roughly 1/25th of the size of the Litecoin network, and I'm thinking it might cost about $1 million a month in electrical to run. But if they give themselves 3% of the mining hash power by the time it's done being funded, that will fund more than the electric, which is awesome. They're also mining Litecoin on the side, but that doesn't seem to be working, but I don't think it's necessary anyway. Again, it's designed to have an ad budget, Texas only. It will remain a USA crypto, so it can't be bought out by China or other nations that give away free electricity. Again, it's also marketed by an affiliate program to generate fast growth by people to get that network effect, and that's totally working. All right, here's the Bitcoin logo. Money does not wait. TEXITcoin, neither should you. Get on board and you hear something good. This is something good. I love it. It's done great for us. This is one of 35 sea container sized arrays of computers that will be running the TEXITcoin network. There are, I think, 2 or 3 of them that are almost up and running. Again, we're getting up to 35. About 21% of the compute power has been already purchased. This is a cold storage wallet. Bobby Gray was involved in crypto long before he started his crypto project. What he did was he actually created the famous Bitcoin logo that you saw earlier in the presentation. He put that on a coin. On the back of that coin, he put a QR code, which is a way to keep your secure crypto password safe on a device that's not going to be floating around on a piece of paper. So we call it cold storage. Again, it's a way to keep your public and private password keys offline, away from hackers and away from hard drive crashes. The public key is your pay me address that lives on the blockchain. This is the public, which is the only part the blockchain sees. public key is derived from, or hashed from, the private key, just as each block is hashed and turned into a hash that's on the next block. So the same technology that takes the data of a block of trades, creates the blockchain, and then gets a hash that starts the next block, is the same technology that takes your private key and hashes it into your public key. Now, the best part about it is that there's an asymmetric way to create. It takes a long time to create, to go from data to the hash. It's extremely fast to confirm. So the public blockchain can be confirmed as accurate and it's linked, but you can't reverse the information. So you cannot. It's called one-way encryption. So you can't take just the hash and then figure out what the password was. But with the password and the hash together, the computers can go, they confirm, and they can confirm it within like fractions of a second. So the private key that has never been stored on the blockchain, never been stored anywhere, but is only etched on the coin, works as a password because it's linked to your public key. Complex, abstract concepts, I know, that's what I'm going over. The private key is linked to the public key, but hidden via one-way encryption. The computers can verify via complex math nearly instantly. The private key can be used to generate the public key and that they're linked and thus verify authenticity. This does not live in a blockchain. It exists only on the coin itself. Wild and crazy, I know. But it's used to spend your crypto and prove that you own it. All right, now this is something very weird, right? We watched a documentary called OneCoin. We have 2 and 1 minutes left?
Yeah, 2 minutes.
I'm almost done. This we used to confirm that our trades done on the hot wallet went onto the blockchain over on the far left. We confirmed that there's 5 confirmations. We can sort of confirm the amount. We confirm the transaction ID. So there's a real underlying blockchain here. The project size, 54,000 miners. I mentioned that. That's found at TEXITcoin. The company provides that information. They have raised $136 million in total revenue, which is a world record in the crypto space. No other cryptocurrency has raised that much. They plan to raise $1 billion, or maybe 600 million, not exactly sure. They're selling 100 million seats for 100 million mega hash power. The coin price right now today, we double checked before the show, it's before the presentation, it's $3.78. The market cap is 227 million. So the market cap is now getting a little bit closer to the revenue that has been raised, but usually it's about a multiple of 4. So we're on a little bit of a price dip right now, which means it's a great time to buy into the market. Here's where I got the data that I just showed in those last 2 slides. You see our curve in the middle, that's our current price chart. You see how it's been really slow stepped up, and then we had this huge spike because there was some Asian trading. People like to know that it's real. When there's big money involved, there should be fancy crypto cars. That's our crypto car. We do miners updates every Tuesday. And finally, I do have an article how to sign up to TEXITcoin. We're at the booths. Come by, see us at the booth. We'll help you get signed up. Mining is passive income. Helps you make money while you sleep. Be an early adopter. Join us while we're still in the funding stages. Funding development of our deal. Look, you solve the biggest problems in the world. That's how you make the biggest money. We're solving the money problem, guys. This is big and important stuff. I've gone over all of the fundamentals. Fundamentals eventually show themselves up with the price. So I hope you can see why both Bitcoin is better than gold and ultimately why TEXITcoin is the better Bitcoin. Thank you so very much for attending. There are some great cryptos and there are some horrible cryptos. There are great businesses in the world and there are horrible businesses in the world. The only people who say all businesses are scams, I guess they call them communists, right? So clearly not all cryptos are scams. There are great cryptos and there are scam cryptos. I believe most cryptos are scams, but they're just using the technology probably in an envious way to steal or get at dollars that are destined for Bitcoin. They're trying to divert demand away from Bitcoin, and they're trying to get your money, basically. But we do need the stable-backed cryptos because we live in a dollar-based system that, for now, people want. And there's also gold-backed cryptos. The trouble with a gold-backed crypto is that it's linked to the price of gold. So if gold is languishing, then it will languish in price, and it will go sideways. But rather, a crypto that's used to be as an honest money without backing. Now think about this. Dollars used to be backed by gold because gold was better than paper money. Kept dollars honest. What's interesting is that they're now backing, crypto with dollars, and there are some cryptos that are backed with gold. But the cryptos that are backed with gold
won't go up as fast as, say, Bitcoin or even our coin. Our coin went up 40% a month, from 10 cents all the way to $4 just in the last year, as we've marketed it and brought it out to more and more people. So sometimes not having a backing at all is actually better because you're creating an asset that can go up in value faster.